Hello and welcome back to our discussion on accounting equation and financial statements. In the last discussion we saw a set of business transactions and their effect on the accounting equation and the related concepts, but I mentioned that we have not taken intentionally the expenses and effects on the equation. So in this session, as a part of our series on accounting equation and financial statement, the session number 2, we'd like to pick up some transactions in the form of expenses along with the same transactions which are already there. So we can rush through the first few one. So the capital is business started with capital 100, which is there as cash. Then they took loan, so therefore cash goes up. Once again, to recap, no change in the capital, and the loan is the other source, so loan comes here. They purchase goods, so let me write down goods, and they purchase for cash, so as a result the cash will come down. So we have done this in the last session too. No change in the loan. Now they purchase furniture, so FURNI, okay, furniture, and for cash no change in the goods, okay, so no change in the goods, that remains same. But whereas the cash will reduce by 35,000 and the capital no change, loan no change. Okay, so this recaps our understanding of the sources are equal to assets, and every transaction will affect the equation is clearly visible. Then laptop purchased, okay, so and the laptop is an asset, so 150. No change in sorry for that, no change in the furniture, no change in the goods, okay, and no change in the cash because they purchased it for credit, and no change in the capital, no change in the loan. However, a creditor comes into picture, and that is for 150. Okay, so equation once again tallies. Now they're selling goods for cash, so plus 50. Okay, cash goes up and the stock reduces to 40%. Okay, to 40%. No change in the furniture, no change in the laptop, no change in capital, no change in loan, no change in X, but there is a profit, and the profit is equal to, okay, into 0.60 of 120. There is also another way of 120, I'm sorry. So as a save, they sold goods for 50. If I'm wrong, let me see whether yes, they sold goods for 150. Let me change that. They sold goods for, okay, so they sold goods for 150. We don't want to have a new item, so 150, yes. So the same question. So therefore 150 minus 0.60 into the goods purchase, okay, so 78, which is same as the previous one. Now comes, this is what we have already done in the previous equation, so 78,000. okay, so since they have ignored the expenses, now we are taking the expenses because of the conservative convention, or conservative because of the accrual concept, because of the matching principle. I have to charge salaries and other expenses for determination of profit. Okay, so if I pay the salary for the period 15, the first place my salary will cash will reduce no change in the goods, no change in the furniture, no change in the laptop, no change in the capital, no change in the loan, no change in X, but however profit will reduce by 15. Okay, so expenses reduces profit and cash is reduced because you paid for it. Now if you just observe the transaction, we have whatever is given we have already taken, but observe closely, there is an interest availed, there is a loan availed at 12% interest. That means you have committed to pay 12% interest on the loan. Therefore you have to show interest, and interest has to be an expense. Suppose we assume that I pay the interest, and interest is 0.12 is given 24, and if I pay the interest, so you can ask a question, why interest has to be paid? Even if not mentioned, interest has to be paid because, okay, interest has to be paid and recorded, okay, or recorded because of BECA, because of the accrual concept. Okay, because of accrual concept. The accrual concept says, as we mentioned, you are bound to show the expense, whether you paid or doesn't pay is not an issue. So let me retain that, okay, show that. So as a result, my cash will come down minus, okay, minus 24, no change in goods, no change in furniture, no change in laptop, similarly no change in cash, no change in X amount, but my profit will come down by 24. So therefore profit has reduced 263 from 78 to 39 from 63 because of the expenses. So interest paid, salary paid are actually the application of the accrual concept. So accrual concept and matching concept says you are bound to record the expenses for the period and show the profit after deducting the expenses for the period. Suppose you can ask a question here, if I don't pay the interest, what will happen? If you don't pay the interest, let us go to the next one. So let me copy that. Okay, so maybe we can go out once again and do it too fast. So I say I take the capital, I take the capital, then I take loan. Okay, so or if possible what we can do, let me try if possible, I copy all these items, hope it will work. Okay, hope it will work. Okay, so okay, it's not working. Let me do it once again. So no change in the capital, but there is a loan of 200, right? I'm purchasing goods for cash, so minus 120, and the stock will come to 120. Okay, and no change in the capital, no change in the cash. Now purchase furniture, next one, purchase furniture 35, no change in the stock, cash will come down by 35, no change in the capital and no change in the stock. Now I'm selling off goods of 150,000. Okay, so I sell off goods, so therefore my cash will go up by 150, my stock will reduce to 40%, no change in the furniture, okay, no change in the cash, no change in the loan, but the profits will emerge, which is 150 minus, okay, minus 0.60 into 120, right? so 78 which we got. We purchased a laptop, so I purchased the laptop, and the laptop is 50, and there is no change in 35 in stock, no change in cash because I'm purchasing it for credit, and no change in loan, no change in profit, but I'm purchasing the okay. And now suppose I pay the salary. So what did we do? If I pay the salary minus 15, wonderful, no change in the stock, no change in the furniture, no change in laptop, similarly no change in these items too, but the profits will reduce by salary, and no change in this X, okay, money due to X. But now let us say that I don't want to pay interest. Okay, in the previous case I paid. If I don't want to pay the interest also, that means there will be no change in the cash, no change in stock, no change in furniture, no change in the laptop. However, something will happen on the sources side, because though you have not paid, because of the accrual concept and matching concept, I'm bound to show the salary and interest as an expense. So therefore profit reduces, but you have to pay that, isn't it? So therefore I'm going to create another item called outstanding interest 24. So that means interest will be recorded even if not paid because of the accrual concept. Can we see something? Profit if interest paid, okay, then we'll see profit if interest not paid. Okay, so that will give us some idea. An important generalization is possible. If profit not paid, sorry, if interest not paid, profit is 39. That's what we just saw. Okay, profit is 39. If interest is not paid, profit is 39. And we also saw that if interest is paid, the profit was also 39, right? If the profit is paid, also the interest is 39. Okay, so what does that mean? That the profit determination is not dependent on, I repeat, the determination of profit or the amount of profit is not dependent on whether I pay this interest or not. In other words, profit is determined using the accrual concept, which says you are bound to record the transaction independent of the fact you pay or not. So let us recap. So in the first case we saw no expenses at all, so profit is 78,000. In the second case we saw the we have took the expenses even if not mentioned regarding interest, and we saw the profit has come down to 39 because of expenses. But here we assume that both the expenses are paid. Now we have taken an assumption here that some expenses are paid and others are not paid, so there is a liability regarding the interest, but the profits remain same because profit is determined using the accrual concept. But even in this example I have not taken depreciation on the furniture and goods, which we'll pick up in the next session. Thank you very much.